Thank you, Mr. Chairman. And Chair Yellen, I think we share a respect for rules-based monetary policy. As you put it when you served on the Fed board in the mid-90s, the Taylor rule is, quote, what sensible central banks do. And it looks like we're in pretty good company. Dr. Charles Plosser, immediate past president of the Federal Reserve Bank of Philadelphia, expressed support for a rules-based framework by setting monetary policy and, quote, him, one of the most important ways to support credibility and thus the effectiveness of forward guidance is to practice it as part of a systematic policy framework. I believe that indicating how the evolution of key economic variables systematically shapes current and future policy decisions is critical to such a policy framework. Testimony before this committee in December of 2013, Dr. Douglas Holtz-Eakin, former director of the Congressional Budget Office, also endorsed a rules-based monetary policy, saying, certainly I would like to see a far more of a rules-based approach by the Federal Reserve that doesn't rule out discretion, because they can pick the rule that they want to operate. But if they can provide it to the Congress and the American people will know what they are up to, and they themselves have said forward guidance is critical. We need to know what they are going to do. Rules provide that, close quote. So I'm curious when you and your colleagues at the Fed will adopt a rules-based policy.
So you used the term systematic policy, and I want to say that I strongly endorse, and the FOMC strongly endorses, following a systematic policy. And during my term as vice chair and as chair, I have tried to promote a systematic monetary policy, and I believe that we do follow a systematic monetary policy.
But not a rule that you're willing to share, correct?
Not a simple rule based on two variables, but let me point you first in the monetary policy report. On the second page of the report, we have a clear statement of our longer-run goals in monetary policy strategy. Any systematic policy has to begin by articulating what the goals are very clearly and the strategy that will be followed, and that's what we do there.
But you do agree that a rule-based policy is a better way to go?
I don't agree that a rules-based policy is a better way to go. There's not a single central bank in the world that follows a rule that would rely on only two variables.
So, well,
what we do is take into account a wealth of information informing our judgments about the economic outlook.
Sure.
And the way we make policy systematic is we provide, and you can see this in Section 3, in Part 3 of the Monetary Policy Report, each individual, each participant writes down their own forecast for the economy and the appropriate policy that goes along with that. And from that, you can get a clear sense of how we expect to conduct policy if the economy evolves in line with our forecast.
I'm not convinced that is clear, because others in the market don't believe that's clear. Other economists don't believe that is clear. And we're not trying to handcuff you, but we are asking that you write a rule within descriptive parameters to use as a reference point. Purely use it as a reference point. And I know one of the things that you've expressed here is, well, you know, we could find ourselves, if we had a rule, we may find ourselves in negative interest rates. Well, simply solve that by writing a rule that says once we do that, we're going to go to 0 and no lower, or maybe 0.25, as you have indicated, which are, we won't call it the Taylor rule, we'll call it the Yellen rule. We can have some of those things that are going to give some predictability, and I think whether it's Douglas Holtz-Eakin or others that have been within the Federal Bank Reserve have said that predictability and that transparency is the way to go. So I know you know that we have a good discussion draft floating around that has some of that information in there, and so just so I'm clear, you don't believe that there is a time that will be right to again go towards a rule-based policy?
I think we need a systematic policy, but I would strongly resist agreeing to follow any rule where the stance of monetary policy depends on only the current readings of two economic variables, which is what your reference rule relies on.
That's what the reference rule does, but it doesn't say that's the rule you have to follow. And we've got a lot of confusion out there. The IMF is saying you shouldn't be raising interest rates. The Bank for International Settlements, which is the central bank of central banks, as you well know, Claudio Borio had said lower rates beget lower rates. And we've got a lot of confusion out there as to the direction we're going, and that's what we're asking for is clarity. Thank you, Mr. Chairman.